Yo, 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 what's going on? Happy Saturday. I hope you guys have. That's a perfect way to start the stream, right? But yeah, I hope you guys are having what should we call it? I hope you guys are having a pretty standout weekend. You know, yeah. Uh, as per usual, right before the next week, during the weekend. Of course, we're gonna use the weekend to get some rest, but also I just figured, what perfect time to do a little uh, pre-market analysis, you know, and not just like pre-market, but then also kind of look at the performance from the week. You know what I mean? Yeah. So that's what we gonna be up to today. I hope my audio doesn't sound weird. It could possibly. I hope it didn't sound weird right at the beginning, but it is what it is. Happy Saturday. We here now. That's what's important. That is what is ultimately important. So yeah. Anyway, we had a pretty I want to call it. I don't want to say a topsy turvy weekend. I mean week, but we did have uh you know we had some pretty notable ups. You know what I'm saying? We had some pretty uh yeah. I think we did a lot of things really well, and then there were a couple of things that I felt like for sure we could have done better, which is why I'm kind of here on stream right now. I just thought like we'd use this time to talk about it, and then tomorrow we'll do proper pre-market analysis. But just for like this, just for like the stream, what we'll do is we'll just go over, yeah, we'll go over like the performance from this previous week, and yeah, we'll talk about it a little. I also just want to, uh, um, yeah, I think like for me as well, just like talking it out helps me a lot when I then get into, uh, you know, when I then get into the market during the week. So, um, as much as this is for you, this is also 100% for me too. So, but yeah, let's get into it. This is what I had like blown up on the screen, because I was ill prepared. But this is our weekly expected value report card, as you can see right there, issue number 2. This is from the second week, so June 8 to June 12. Still trading the same thing, still trading the ES. So what we're doing is we are trading the ES, but we're taking our trades on the MES, but we're using the ES chart to then find our levels. You get me? So that's what it is. Yeah, still one instrument, same asset, week in, week out. What do we have? So from week 1, that was our June 1 to 5. We had 7 trades. Remember, we had that problem with the power on the one day. And then we had a no trade day also, which was on, I believe that was Wednesday. I want to say it was Wednesday. Yeah, because we went Monday, took an L on Monday, the very first trade. And then Tuesday, took an L also on the second account. And then Wednesday, we didn't place a trade. And then on Thursday, we didn't have any power, so we weren't in stream. And then on Friday, that's when all of this happened. So like, really, if it's 3 trading days, but ultimately it was only like really 2 trading days, because we only took trades on 2 days. So that was a week 1, hence the 7 trades, 57%, 57.1% win rate, average win $101, average loss 115, expected value per trade $8.75. I know you're probably already looking over on this side, but we'll get there. Profit factor 1.18. Gross, our gross P&L 96.25. The $35 in commission. So because we were taking the same size trades ultimately. You get me? Wow, our camera's disappeared again. Or did I switch it off? But yeah, we were taking the same size trades, right? We're taking them on a five lot, five contracts, lot size of five, hence commission of $35, so 5 by 7, 35. That's how you get the commission. Then net P&L 61.25, average trades per day 1.4. All right, cool. And then now it's switching to a week 2, which is this previous week, which is what we're gonna get into, in a lot more detail. I also have screenshots that I'll show you guys of the trades, and we're also gonna go into the motive wave and we'll pinpoint the time and the direction and all of that, But week 2, 17 trades, so up 10 trades from the previous week. Lower win rate 52.9, but average win 241, average loss 156. So both of these numbers is up, well, up and down, you know what I mean? Like the average win is up by 139, the average loss is down by negative 41. And then expected value per trade is 53.90. So that's up by 6. And profit factor of 1.73. Gross P&L 1,001. So quite a jump from the previous week. I'll explain why. If you were in stream, you would have seen me take this trade. Like, commission 85. Again, still sizing the same. I'm not increasing from like the 5 lot size. Because I feel like, say you take a trade with 5 lots, right? If you lose that trade, you lose whatever 5 lots is gonna be worth. Makes sense, right? But then if you then win the next trade, but you're using a smaller lot size, you're not gonna quote unquote make the difference. You know what I'm saying? So if you trade on 5 lots and then you take an L, and then you take a second trade after that on 2 lots, you're gonna have to win 3 trades in a row to get that back. I know there's like a whole debate on like dynamic risk sizing and stuff, which I'm just not comfortable with that. Personally, that's just not my bag. And I think that's fine. Like, to each his own, right? To each his own. So, where we at? Report card. There we go. So 17 trades, 52.9 win rate, average loss of 156, average win 241, expected value up 53.90, profit factor 1.73. As you're seeing right there. And this is why I was saying, like, also on the stream, why it's like so important for you, to collect your data. Because once because it's different, like knowing your stats is different from having them. You could be like, you could know that you perform better on a Wednesday, but having the data to back that up is different. You know what I mean? It's different. It just doesn't hold as much value, without the actual data itself. So again, I'm gonna keep on doing like these weekly reports, so we have a good week. Next week we'll have another expected value weekly report. So this is like our expected value per trade from each week. So up from 875 to 5390. So combined over like the 24 trades that we've taken on this account, which would be what, the 17 and the 7, combined expected value of $40.32. So not too bad. I think at least we're moving in the right direction. It's not like a big dramatic change, right? It's not, I guess from $8.75 to 53 is quite significant, but there is somewhat of an outlier in my data, which is also what I'm going to speak about in just a bit. But yeah, like my thing is, if you make the right types of changes, right? So say instead of like trying to make like this massive improvement with like your trading or whatever, where you go from, let's say you go from losing a trade every day, right? You go from, okay, every day, let's not even start there. Let's say we start with you overtrade, and you've seen that, like, actually after trade number 4, right? After trade number 4, you actually just start giving money back to the market, right? You noticing that, however it is that you're noticing it. If you're just like noticing it because like you know it now, or if you're noticing it because like the data is telling you that, right? Now you have that information. Cool. What's the 1% change that you make from that, right? You go, okay, cool. Well, usually after 4 trades, I start losing money. So what I'm gonna do is I'm gonna cap my days at 4 trades a day, which still sounds like a lot of trades, right? But it's your 1% difference, right? So on Monday you come in, you're like 4 trades, Tuesday 4 trades, Wednesday, Thursday, Friday, right? So it's like now you have 4. It's like you have 4 poker chips, right? Like mentally or psychologically, that you're telling yourself, actually, I only have, gonna use peanuts, right? You're like, gonna go nuts, right? These are like all the trades that you have per day, right? So you get rid of the 1, that's 1. You get rid of the 2, 3, 4, right? I don't know. It's kind of, I don't have poker chips, so. But yeah, but like you see, you made that 1% improvement. So you go from, okay, cool, I overtrade. My overtrading is more than 4 trades. Cool. Monday, Tuesday, Wednesday, Thursday, Friday. You go 4 trades. You go in the next week, again, Monday, Tuesday, Wednesday, Thursday, Friday. Cool. And then you look at that data. Now that you've made that 1% improvement over 2 weeks, what is that data then now telling you, right? Actually, my trade number 1, like my first 2 trades come so early in the day. They come really early in the day. Okay, cool. So now you shift that up, right? And you'll find like maybe when you start trading a little later, right, your window kind of shrinks. Because most people, as soon as like New York opens, right? Let me not say most people, because I used to do this myself. Like as soon as it was like 28 minutes past 9, right, EST, I already have a limit order. I'm selling here, and then obviously you get wicked out. And I was like doing this on NQ, so you can imagine, but you kind of just like gradually make like these 1% improvements. And that's what I'm doing with this weekly report. I will explain, as I said, why I said we have an outlier in the data. But yeah, account 1, and again, so like I have like 2 accounts, right? Of which, like I've been saying also on stream, that like one of the accounts is performing a lot better than the other. And weirdly enough, like it's kind of crazy that I have this like data also, right? But have a look at this. Like on account 1, we've only done 5 trades. On account 2, 12, right? But my win rate on account 1 is 80%. So that's like 4 out of 5 trades. Right? I've won 4 out of 5 trades on account 1. And my gross P&L is 1,337 on that account. Net P&L 1,312. Profit factor 6.91. Days active Monday, Tuesday, Thursday. Like literally only traded this account 3 days. All right. 3 days. I took 3 days. Standout trade, and this is the outlier. This is the 718.75. Right. This was a Tuesday short. And what was crazy about this is that like I identified it because I knew this was a play, right? It doesn't always present itself, but I knew it was a play. And this is the Dalton rule play that I've like spoken about, I guess. Why I spoke about it on the day right before we took the trade. So essentially what it is if price opens above previous day value, above or below previous day value, and then it rotates into, right, from above or from below into that previous day value, then we have a higher probability of price going from one value area to the other, or from value area to value area, right? So from value area high to value area low, or from value area low to value area high. So I identified that. I saw that. So it wasn't luck. You know what I'm saying? Like I'm not gonna take that away from. That was like a really good trade. But I saw it. And I saw it like pretty early. And then like as soon as I really were getting it, like I just got into it one time. I didn't get the full rotation to value area low. I traded it from value area high to point of control. And then I was trailing my stop, and then got stopped out. I got stopped out. I think it was overnight value area high, I think, or low. I can't remember. But I was like trailing. Essentially what I'm saying is I was trailing the stop. So so that was the outlier on that particular day. But again, like if you're looking at it, that's like 5 trades, right? 5 trades in total. But the big trade that came out of that, I mean, minus that, like this account would still be on what, like 500 and something, if it wasn't for the 718 trade. And then on account 2, which is kind of like the opposite, because like my account 2 is suffering, and I think psychologically what I've done is I've used this account instead to toss my losses. Like if I kind of feel like I'm not gonna like get the trade, I do it on account 2. And I didn't think I was like doing it intentionally, but even if I'm not doing it intentionally, I still am doing it. Which is insane. We had this situation where on Friday, we shouldn't really be at 12 trades. Like honestly, we could have been at 9. We could have been at 9 and we could be net positive. But on Friday, what I did is I took an account. Not an account. I took a trade, which my first trade was a winning trade. And if I just gone for a base hit, we could have got like the full 12 points, which I usually aim for in the day. But then I trailed that stop. And I trailed it because I was going for, we took an overnight point of control to an overnight value area high trade, which is one of my best trades, right? And I trailed the stop. You get me? I trailed the stop, and then I got stopped out. I got stopped out when it was retracing. Cool, but we had made money for the day, and like honestly, I could have called it a day, And what I was actually essentially and initially waiting for was an initial balance trade, but I got impatient, and as soon as like price left like the zone, like the initial balance that I wanted to trade, or that I thought we were going to trade, I thought we were going to target the initial balance low, right? So I ditched one complete plan and fabricated a new one, which was still a valid trade, but it wasn't like the plan that I had set right at the beginning or right after I had taken that first trade, right? And I mean, after like catching a small L on the first attempt of it, I then tried it again, and then I caught an even bigger L, and that was like 3 trades, and I was like down 100. And then we eventually got to initial balance, and I didn't call the long, I called it short instead, so it was kind of like one of those situations where I'd been speaking about it. I spoke about the previous day, how on Friday, what Friday was about protecting the capital. I was like, yo, we need to go into today, and we just need to protect the capital. We don't need to take any risky moves. We just need to take sure things, right? Now we don't have to force anything. That was like my whole chat, and then, you know, yeah. Then I kind of got thirsty for points. So one of them ones. You know, you know what I'm saying? It's just one of them ones. What can you do? But yeah, um, that was like pretty much it, man. I mean, it's like that's what happened on this account. We could have been net positive, but we're not. So it's all good. We're just gonna treat the next week like a new week, but now with a little more intentionality. You know, I also did say in my journal when I was journaling, I said, so like when I journal, I write the full narrative. And I know people kind of like knock that a little, where it's like, you don't need to write out an entire story or whatever, right? But the thing is, like, when I do, I don't journal. For example, let me show you guys what I mean, because I'm like just talking, right? Let me show you my Substack. Let's make sure that that's loading. Please don't tell my friends I trade. This is my bio. Part-time order flow, former NASDAQ crash out. So this is what I'm saying. Like, I started doing this in April, so I've been at it for quite a while. You know, but what I really wanna get at is, like, I write the full thing, right? And when I say I write the full thing, I mean the entire. I journal the whole experience. So this was Wednesday, right, the 10th of June. Statistically, my worst trade, but we still took the trades we saw as potential opportunities. The good that came from this trading day is that we called it a day as soon as we identified our edge wasn't going to play out, right? See, if I didn't write this down, I wouldn't remember it. One. So now I can go back now. I can look, and also I have like screenshots. All right. Now I'm looking at this and I'm like, actually, you know what? I can see that, because that's like trade one. We were like in it like immediately got stopped out, right? And then what? And then we caught a dub after that. All right. So now we won a one, and then probably tried another one, and then we lost there, right? Which, and then after that, I think after this trade, I was like, yeah, let's call it. You know what I mean? Let's call it. And the whole thing of like cycling accounts also helps me, because at like one, I win on one account. I spread the losses across accounts, across both accounts. But you know, yeah. So again, like, only good that came from this trading day is that we called it a day as soon as we identified our edge wasn't going to play out. Decided to work on account 2, as that's our worst performing account so far. I tried along the overnight value area high to target the previous day point of control, but this was towards the end of the up move, because I stopped out pretty quickly with that one. Now, also with that information, now what I know is I'm probably not going to try an overnight value area high fade. I'm going to need a lot more information before I try an overnight value area anything, like an overnight value area low or an overnight value area high. I guarantee you, if I scroll through the rest of my trades, a majority of my losses, or wherever my losses are, there's going to be a fair number of them that are overnight value area high, not overnight value area low, but yeah, we then switched to account 1 and went short just below the overnight value area high. So you see that's a fade. Trailed my stop on that trade and secured some point before it reversed. Then took a second trade on account 1, targeting the previous day value area high. Right, this was a developing value area high long, which did eventually hit our TP, but not before he stopped us out. So this was probably like a break and retest of the value area high. ATR was pretty high for the day, and we had a lot of volatility in the market today. We're trading up during the AM session, and the overnight point of control trade, which I know is our best trade, did present itself. but just before my trading window opened. We might need to reconsider how we approach that trade in the future, as it does have some really good potential, especially long. 1 out of 3 trades won today. We'll be back tomorrow, right? And okay, cool. I guess we're not gonna see it there. Will we see it here? All right. There's no overnight point of control. All right. Break, retest. But this happened before our 9:45 window, so I didn't take that trade. But there it was. It presented itself. That could have been massive. That could have been that could have been me done for the day, you know. And even on the next day, I took that exact same trade. Overnight point of control, targeted the next level. Next day, probably did the same thing. Overnight point of control, trailed the stop. You know, so for like 3 days in a row, it presented itself, right? 3 days in a row, it presented itself. And then this is where I tried the overnight value area low fade. See, didn't get that. I actually tried it twice, you know, before I got stopped out. Yeah, so essentially what I'm getting at, right, what I'm saying in like a billion words is that I'm not going to just journal the levels. I'm not just going to journal the took a trade from 7, 435 to short to 426. Yeah, because then I did that, but like, what does that actually tell me? You know, like the numbers themselves are not important, but like the idea, like the thought behind it. Because like now I know, like mentally, psychologically, now when I'm thinking I need to improve on something, there's something I can go back and look at, right? Where I'm like, damn, like I wrote that. That's what I try to do. You know, that's what I tried to do, and it didn't work out for me. Cool. Now that I'm going into a new week, right? I'm gonna go into that week carrying that information. Like now when I'm going into the new week, right? I'm not trying to long extremes. You get me? I'm not trying to long extremes. Like value area high, value area low. No. Like I'll long a point of control, or I'll long a point of control because I know those work out for me. And I'll short an overnight value area high. You know, I'll call a fade. I'll try and catch a fade. You get me? But yeah, but see now here it is, day by day, week 2, 398.75, 4 trades, 75% winning rate, VP anchored wrong. Oh yeah, I also did that on Monday. I forgot about that, but I anchored my volume profile wrong, but it created a volume node. I created a low volume node because I just anchored it from the down move, right? This is also something that I then learned. I was like, oh, okay, cool. I guess I can do that and see where the low volume nodes are from that auction process, you know, so fortuitous. Yeah, and then Tuesday, 2 trades. This is where the Dalton rule short. That's where I that's where I got like that 718. So that was on Tuesday. Only 2 trades from that day. The other trade was a losing trade. Then on Wednesday, that was where I showed you guys where I didn't get that overnight point of control because it was early. Called it when edge wasn't playing. High ATR volatility. Cool. Thursday, 4 trades. Overnight point of control long. IBL short. Right, so I played an initial balance there. And then a formal trade, which I took to break even quickly. You know. And then Friday, traffic light day, green to red day. Overnight point of control win, then 3 shorts off the playbook, right? So, so yeah, so like best believe, like going into like tomorrow when I start, tomorrow when I do my pre-market, right? I do my pre-market analysis and I'm like marking out my levels and I'm drawing out my levels. Like, oh, this is the previous week, value area high and value area low and whatever. And this is the previous day. Like, I'm going to be like so locked in, not just not just like with the things that I did right. Like those, I'm like, okay, cool. I know overnight point of control. I'm not even like at this point. I'm overnight point of control long. I'm not even gonna just like stop to think about it. I've seen that a couple of times now. If it doesn't work out, it's gonna be because statistically it has to not work out at least a couple of times. There's nothing that works 100%. Anyone who says they have like anything that's like a 90 something, 99% win rate is a fucking liar. You get me? But I know statistically it's gonna play out. Even if it's a thing of like, oh, this thing plays out like 4 out of every 5 times, which is I guess 90%. I guess maybe I'm a liar too. But hypothetically, say it plays out 4 out of every 5 times. Like overnight point of control long always hits the next or always gets 12 points, right? I'm not even thinking about it, because it's there. I don't want this to be more complicated or more difficult, because this is already tough. You know what I'm saying? Like this is already hard. Like the most difficult part about this thing that we do, right? This whole training thing is like it's not the technical analysis. It's not the you drawing lines or marking out levels and you know deciding long or short. You could like toss a coin. You could every morning you could just toss a coin and be like, yeah, I'm short for the day because a coin landed on heads or whatever, right? No diddy. You could do that, right? And you'd win. Like that's what's crazy about it. Like you'd be somewhat profitable, right? The most difficult part about like this thing is you. It's like getting over you. It's getting over your greed. It's getting over your feelings of lack. It's getting over your insecurities. It's getting over your self-doubt, right? Because when it's happening like in live market, it's like super chill now. I mean, like you can see on the left there, my you know my trading sea. Nothing's happened. Market's closed. You know what I'm saying? There's nothing really. It's not moving. Like there's nothing. It looks super chilled, right? But in real time, those candles are moving, boss. They are moving up and down like this, and you have to make a decision quickly. You have to decide: are you getting in here or are you not? Are you involved or are you not? And you need to be sure about that. If you're getting in, you're in. How much are you risking though? You know, so it's that. It's like most of it is just getting over yourself. It's not even. It's got nothing to do with. I mean, yes, it does. Institutional levels and all of that, right? And market participants, yes. But what I'm getting at is that like you are also a factor in all of this. You know, you are also a factor. If you think I'm lying, try and like get into a trading session when you haven't slept. Or when you're sleep deprived. When you sleep deprived and you haven't eaten properly. See if your performance is gonna be the same. So you know what I mean. But yeah, I also have like expected value by direction, and this is like also super. This was interesting for me because I totally flipped my shorts, right? So in like week one, my winning trades were all, they were longs, you know, my longs at an 80% win rate, and then come this week at a 57% win rate on my longs. So still net positive, which is good. But my shorts from the previous week were like 0%. Like I won no shorts. And then this week then was a 50% win rate. Expected value of 75. And the reason why this is so high is, again, is because of that Dalton rule short. Yeah, which this is what this is as well. Your short trades went from 0% win rate to 50%. The profit factor of 2.19. The Dalton rule short on Tuesday and the June 10 trading short are the headline contributors, right? Contributors. This is a meaningful signal, but 10 trades is still a small sample size. Don't over index yet, right? Long EV drop from 97 to 22, still positive, but the edge thin. This is partly the June line developing volume profile long. Then last fall DLL, and partly the June 12 losses. Your long edge has historically been your foundation protected. So again, it's like now it's the thing of like not. That's what I was saying. It's like now it's the thing of like not doing anything stupid. You get what I mean? Like now I'm not gonna be like, oh, I guess like we're at the developing volume profile value area high. I'm gonna wait for a break and retest. Of which what's crazy is like when I was back testing it, that was presenting itself like all the time. And like when I went back with my data from like a previous data set, I thought those were trades that I was winning. And then I analyzed it again. I had to look at it again, and I was like, actually, where was I getting this idea that like, you know, longing from a value area high, and so, um, yeah, that's like pretty much like almost it, man. Both weeks, 100% win rate. Wait, hold on. Overnight point of control, your primary edge, right? 100% win rates, 3 from 3. It's not really 3 from 3, is it? Yeah, because I took it on Friday and on Thursday, but it was there on Wednesday, but I didn't take it. So it's not, I didn't win that trade, right? So it's more like two for two. But I guess like 3 for 3 in the sense that like it presented itself 3 out of 3 times, and 3 out of 3 times that was a winning trade. You know, appeared 3 days in a row. Wednesday missed, and Thursday, Friday. Overnight point of control long is presenting itself almost every day, and you're recognizing it. On June 10, you noted it appeared just before your window. That awareness is a growth. The question for next week is whether you can find a way to be ready earlier or accept it as a setup to target in the first minute of your window. Uh, I'm not gonna target it in the first minute for a couple of reasons. Like the overnight point of control. The overnight point of control trade is like one that I want to see a break of and then a retest. You know, um, yeah, I want to see a break and then a retest because the retest will. I feel like retests are a lot stronger than getting in on say like a buy stop or a sell stop, right? So a retest is basically right. So a retest is basically we break above the level. This is the level. We break above the level, we come back, we hit it, and then we bounce, right? So essentially, it's what was previously resistance, right? Price would come bounce off there and then go lower. So what was previously resistance has now turned into support. The only way we're gonna know whether it's turned into support is on the retest of it. So you let price go above, and then if you miss it, you miss it. Tough cookies, right? Um, but yeah, you allow price to go wherever it's going, and then to come back and retest it, and then that's why I'm saying like with the overnight point of control, I'm not gonna get it like as as soon as it touches, because again, it might touch and fail. You know, it's not like every time price gets to the overnight point of control, it always goes long, right? I'll show you an example, actually from what was that? 8 June, 9 June, I think. Oh, yeah, you see, like here's this wasn't the example I wanted to show you guys, but right, because this was a Dalton rule. This was a Dalton rule trade, right? This is where we got stopped out. But see, that's the overnight point of control, right? We were above it, cool. But then we hit the overnight point of control and we fouled through it. And also, context, the overnight point of control was within value, right? Within the previous day's value. This trade I took immediately. Actually, I'm lying. I took this as a buy, as a sell limit. I got lucky and I got filled on this, to be honest. Yeah. But I got it. What can I say? But yeah, you see, that's not a case in point where it's like, oh, when price gets to the overnight point of control, it's just gonna bounce, right? Again, like everything is gonna be about context and how, yeah, how I. Okay, cool. I was just double checking that was on the right day. But like how I would take that trade, right? Like what I want to see is I want to see it go. I want to see it fade from overnight value area low, and then when it comes up, when it goes past the overnight point of control, then I'll take it from there. Yeah, so here's a perfect example. See, we open it overnight at the point of control, from the Globex point of control, right? We went below. Actually, you really didn't even need my motor wave today. I don't even know how I opened it. But yeah, we opened below. We opened within value also, right? So previous day value area low, previous day point of control. Cool. We went below the overnight point of control, and then we failed to break below the overnight value area low, right? So my thing was like, as soon as we get a break, I'm gonna wait for the retest, and then that's what I went for. But again, it was a thing of context, right? It's a thing of context. I think also like another thing that I'm like starting to learn and realize is that a big part of this is how long can you be bored? You know what I mean? Like how long can you just sit? You know? How long can you just sit and let things not happen? You know what I mean? Like it, and it's mad because like also my like my am I gonna call it a strategy? It's not really a strategy, but I mean like I guess the system that I trade, right? Yeah, I don't want to call it a strategy because then I don't want to call it a strategy because then it's just kind of like a rabbit hole. I'll explain a little later. But yeah, but I'm just saying like the system that I trade is a little weird in the sense that it looks quick and it looks messy because it's like 1 minute candles, right? And they're like printing really quickly. Really quickly, they're printing every minute, right? So every minute there's a 1 minute candle, and there's another 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 candle, right? But that's important to me, and to my system because I trade from institutional back levels, right? And it's important for me to see how price is forming or developing around the level, right? Before I make a decision. I'm not, you know, and I get the information from the candles themselves, from the candlesticks themselves. So again, where should I go? Should we go into like motive wave now? Let's go into motive wave. So much for we didn't even need motive wave. Yeah, I think like my big trays only load for like one day. Or do they? Yeah, we'll use this. We'll use this day as an example, right? This is Friday. This is Friday price action. Cool. So how are we gonna like, how are we developing like the narrative? Like what type of story are we telling, right? What are we seeing? So 9:30, right? 9:30 we open, we break below the overnight point of control. We break below the overnight point of control. We come back up to the point of control, and again, see now, zooming into the 1 minute candles. I'm just zooming in so that you guys can see what I want to describe properly. All right. So, okay, cool. So, we get to the overnight value area low. All right. We hit the overnight value area low. We come back to the overnight point of control. But like, look at that. Like when we get to the overnight point of control, we actually sell off it, right? We reject it a couple of times. So first at 9:34, and then at 9:35, then at 9:36, and then at 9:37, and then at 9:38, right? All of these candlesticks carry information. Like that in itself is a story. Like the wick in itself is a story. That's important information. Otherwise, if it wasn't, then there wouldn't be any need for wicks, right? They wouldn't put them on there. But like the wick is gonna give you information. It's gonna tell you something. If we're looking at this on a 5 minute chart. I'm sure like maybe around 9:35, around about 9:35. I don't know why we're guessing. We could just actually switch to a 5 minute chart and look at the information that we get from there. On the 5 minute chart, we only get like one. We only get that information once, right? So we wait for it. It opens there. We wait for it. It comes. It closes, and then after it closes, it opens, and then it comes, and then it closes, and then we wait for another 5 minutes, and then whatever it is that's happening on this candlestick, big selling, cool. Yeah, we know that's big selling because like that's over a 5 minute span, right? But then like the amount of information that you get from these two candles is not the same amount of information as you would get from the 1 minute, you know. You know what I mean? Where's our 9:35? This is our 9:35, right? 9:36, 9:37, 9:38. At 9:38, you could then have made the decision to go short, right? Just not within our trading window. And why would you have made the decision? Because, well, first of all, selling the, below the New York View app, sold it there, try to break above it, failed to, try to break above it again, failed to, right? Well, try to break above it again, failed. Broke above it, sold below it again. And then again, we try to sell above it. We try to buy above it, right? And then big sell orders came in. So it's like, you kind of have that information from like 4-5 different candles, and you're seeing it concurrently. You're seeing like, oh, okay, minute 1, minute 2, minute 3, minute 4, minute 5, damn, okay, maybe I should go short from here, right? Or maybe like once you see this print, let's see what time this was. Just double check. Can't remember if you can actually see what time the order came in. Can you? As if you can, it's really, yeah. So you see 9:38:40. 9:38:40. So just before the close of this candle, right? Just before that 39-minute candle closed, right? You get the big sell bubble print on there. 20 seconds doesn't. People treat a minute like it's such a short amount of time, but I'm gonna sound super woke now. Let me talk my shit. People treat a minute like it's insignificant, right? But honestly, like, when was the last time you sat with yourself for a minute flat and did nothing? You didn't touch your phone, you didn't browse the internet, you just sat for a minute in your own silence. A minute is a mighty long time. People can't even like sit in awkward silences, silences that go beyond 10 seconds, that's what will constitute an awkward silence, right? But all of a sudden, somehow, when we're in the market, our chat is, oh, a minute, like, oh, a minute is like so quick, a minute is so quick. And it's like, nah. It's just like your heart rate and everything is just like so elevated. You're not actually seeing or reading what information is coming into the market in real time. You know what I mean? Like, you're not seeing it for what it is in real time. You're not interpreting the information that you're getting in real time, So that's why I advocate for the 1 minute shot. Not really, I mean, but that's why I use the 1 minute shot. But yeah, this is almost gonna be the end of the stream, guys. I've been yapping for almost an hour, It is what it is. But yeah, so we spoke about the overnight point of control long, and also again, just while we're saying like everything is context, right? And also why I will not, I won't just long the point of control like as soon as I see it, right? As soon as I get a touch, because yeah, cool. say I'm really really eager to get into the market. Also, why like we have rules. My rule set is I only trade after the first 15 minutes, right? So cool. After 15 minutes, I feel like there's enough intent has been shown by market participants, right, for me to then make a decision with what I am currently seeing, right? So if I'm just trying to get in even before my window and I see that, I'm like, oh, okay, cool. Like we just hit overnight value area low, and now I'm gonna go long as soon as we hit the overnight point of control. I would have been stopped out of this trade. You know what I mean? And my stops are usually like what? If I'm risking like $200, my stops out of 5 lot, my stops are usually like 8 points. You know, so towing like 4-2 is where I'd have been stopped out. You know what I'm saying? Almost immediately, like here somewhere. If not here, I'd have been stopped out here. You know. So everything is context. You know, like all of these levels are context. Like the volume profile tools, it's all context. It's not one size fits all. It's not the same paintbrush stroke. Like, oh, okay, cool. Today because this. No, like there's context, and like when you add all of the things up, like you then get a broader story, right? So you're looking at it, you go, okay, cool. When I'm saying overnight value, right? I'm talking about when I say overnight value, I'm talking about the most recent auction, right? From from the overnight session, from the Globix participants, right? So these are the people who are trading just before our main session, which is the New York session, right? So there's a lot of volume there. There's people who are trading Asia, there's people who are trading London, right? So those participants are still there. Like their markets are still somewhat open, right? And in a way, maybe they're also waiting for the New York like for the New York session to open, right? So like that level is important. Like uh, this excuse me, these levels, these blue lines here, the overnight value and the overnight point of control and the overnight value area low, they're important because also they set context as to where the overnight participants were transacting and what they deemed fair value and what they deemed was premium and what they thought was expensive, right? So when these New York participants come in, then they come in and they're like, all right, cool, this is fair value from the past couple of hours. This is discount. And you can imagine like when we're like moving, I did actually put this on the charts and I actually did set the order. When we were moving lower, I was like, damn, we might actually get another Dalton rule play. And this one was going to be massive if we actually got it. Because look at the size of that. It's like 363 to about, it's huge, bro. It's like 100 and something points. You know, um, yeah. And again, why? Because we had opened above the previous day value, right? So my thing was like, damn, if we actually rotate in, we're going to fall, you know? And then we did. Mm, mm, we did. But yeah, but like what I'm getting at is that like the context, the where the participants are, where the value lies, all of that is then gonna give you the narrative, is then gonna give you the story. I then like pepper and throw other things on top because they stop me from doing like some of the dumbest things you could ever do, right? So for example, I want to know when the market is overextended, right? When we've when we've done all of our selling, right? Most of our selling in the context of a moving average and ATR. I'm nerdy like that. I want to know that. I don't know how many other people use the Keltner channel like that, but I use it like that. You know, it's not a strategy. It's just a tool that then gives me information, right? So now I know the market's overextended. We've oversold. I'm not trying to sell randomly in no man's land, right? I'm not. Look, this was before our window. Cool, our window opens 9:45, right? As much as like this is when our window opens and we've been selling off, I'm not just gonna short here when it's not at a key level, right? I did it later, kind of, but I'm not gonna short at an area that's not a key level, right? That's not a level that I've marked out. That's not an institutional level, right? I will wait. We will wait for it to get here, and then we'll take that trade from here, right? Because if it fails to, then it invalidates our trade idea. And that's exactly what happened. We're overextended on the Keltner channels. We didn't get to the previous day value area high, but didn't fall below the previous day value area high. And then instead, what we did is we went and we broke above the New York VWAP, broke above the New York VWAP, and then we broke above the overnight value area low, broke above the overnight value area low, broke above the MA, broke above the Globex VWAP, and now I'm confident now to take the overnight point of control trade long, right? So it's context. It's not just a thing of like, I put these lines on, or I put I put these levels on, or whatever, just to complicate things, or I have the big trades just because it looks nice on the chart. Like, I wish like there was a way. I'm sure there is a way. There's another way for me to do this, right? For sure. Because not everyone uses Keltner channels, and not everyone uses volume profile, right? I could use the time and sales. I could use this, right? Which in itself would be pretty crazy. And try and identify like big buys and big sells here in real time as it's happening, right? Try and identify these big trades as they're coming into the market, right? And see them here instead. I could do that, or I could use that with a DOM, right? And see where the bids are and where the asks are, and see where there's potential roadblocks, and so it's not to say that like, oh, like the only way to trade is like using these things that I'm using, or this is the only way you can know if like we're overextended or if we're about to get a reversal, of which I don't think anyone can like call a top or a bottom perfectly, right? But if it keeps you out of like doing like the dumb things, and it keeps you out of doing the dumb things. And it's also like a probability thing, right? Which is why the biggest part to it is not so much so the making money, it's the managing the risk. It's the making sure you don't lose everything. That's what it comes down to. It comes down to, can you manage your risk in such a way that you survive long enough for you to come back the following day, and then do that on that day so that you come back the day that follows that day, and then you do that on the next day until, you know what I mean? Because even with like a 40 something percent win rate, right, you can still be really profitable. So yeah, I think that's almost my quota. I think I've fulfilled my quota. Whoever's gonna find this on the internet, congratulations and well done for coming and joining me on stream. I should end it by showing you like the final mark on my report card. But yeah, these are like my strengths and weaknesses for week 2. Overnight point of control recognition is sharpening. Short expected value turned positive. Formal trade self-correction on Thursday. We flagged the last trade as formal in real time and moved the stop to break even. Wednesday kill switch, you called it a day early when the edge wasn't playing. Trading stops are consistent strength. Also something that I'm now gonna just continue doing. Weaknesses, account 2 is being overtraded on losing days. Friday is a recurring blow up day. Green red on June 12 mirrors patterns from the legacy journal, which is like my previous journal before I started trading live with you guys here. Off playbook shorts costing most of the losses. Tool reliability is a recurring issue. Like my motor wave was kind of freezing on like during the streams, which is a problem. I had to restart the stream a couple of times. Well, I think like twice I had to restart the stream. And then chasing after losses. June 12 explicitly, so determined to get the VWAP short from IBH that I failed to identify price was in fact now moving upwards. The pattern from the legacy journal, Ego. The pattern from the legacy journal, Ego after losses, still appearing. So it's, still things that I know I need to work on, so tonight I'll sleep, I'll rest, tomorrow I'll rest. And then when I come back on Monday, I'll come back on Monday, I'll go through this again, and then just be self-aware of those things, and just be self-aware of the things that I now need to improve on. It's like, okay, cool, I'm doing these things really well, so I know I just need to continue. I don't need to think about these things too much, because like these things I'm doing well, right? I'll just continue doing them the way that I've been doing them. And then these things that I haven't been doing well, I'm gonna give them a little more thought before I do it. You know what I'm saying? And when I identify, like, oh, I remember last week I tried this thing and it didn't work last time, so now, you know what I mean? Session structure: first trade versus subsequent trade. First trader session, 5 trades, 40% win rate, right, from the first trade. Subsequent trades, or second plus, 12 trades, 58.3% win rate. But look at that. Profit factor of 1.39, an expected value of $30.52. So both of these are positive EV this week and improvement. However, the first trade EV 110 is driven heavily by the Dalton rule short. Without that one outlier, first trade EV would be negative. It's crazy. Subsequent trades are marginally positive, but include most of the off playbook losses. The rotation system is critical here. It limits subsequent trade damage to one account. So that also is something that I kind of need to like sit and think about. Yeah, I need to like sit and think about that, because if I hadn't got that Dalton rule trade, if I'd missed that, then essentially I'd be negative on as it's saying, I'd be negative on the first trade of the session, right? As far as like EV is concerned, so I need to go and look at all of my first trades. Monday, I need to go and see what was my first trade on Monday. What was I trying to do? Same thing. Tuesday, what was I trying to do first time? What am I looking for in the first 15 minutes? Where's my head at? And look at it not just from like this previous week, but also look at it from week 1. So more homework for me to do tomorrow. But yeah, that's pretty much gonna be it, man. I mean, if you guys wanna have a look at this, if you wanna have a look at this, I mean, I could link it somewhere, But yeah, rating A-. Best week yet. The edge is clearly developing. It's too much to read, bro. Yeah, you guys will let me know if you wanna have a peep at this, and then I'll make it available somehow. I'll make it available. But yeah, I think that's gonna be it for me. I've fulfilled my quota from the day for today's stream. So yeah, not too much pre-market analysis, more so post-market analysis, from to keep it a buck. Yeah, I think it's definitely gonna be like worth a rewatch if you're here for the first time, or if you're here again for the second time, or whatever. I think it's gonna be worth the rewatch. I think I said a lot of things that are probably gonna be worth your while to listen to again, but it's all good. I'm gonna call it I'm gonna call it a night, and I'm gonna get some rest, boy. I'm gonna go get some rest. But yeah, I'll catch you guys tomorrow. Tomorrow we have the blue market cap video, and then after we do we have the blue market cap video, and then also we're gonna do our levels. We're gonna do our pre-market levels tomorrow. So probably gonna be a pretty short stream, but yeah, I'll catch you guys. I'll catch you tomorrow. If you're not subscribed, do the right thing. Subscribe. Hit that like button. Hit that notification